Hello everyone, welcome back to the channel. So you can see the screen, right? There's a Ferrari fancy race car on the screen. So and then you know what I'm gonna talk about, right? Well, we're gonna talk about Ferrari, but not about the car. It's about its stock, okay? Today we are shifting gears from mass market tech to the absolute pinnacle of luxury and engineering, Ferrari, and its ticker is RACE, race. Well, I have just finished dissecting a fresh first read report from UBS titled, here we go, titled Ferrari MV Conference Call Feedback, a more balanced year than initially anticipated. Well, in a market that is constantly obsessing over quarterly beat, Ferrari remains a masterclass in long-term control. Let's break down the logic behind the prancing horse. Okay, the quality over quantity beat. Let's take a look. Ferrari just reported a stronger than expected start of this year. Let's take a look at these numbers. The organic sales growth, OSG, came in at 6% versus consensus 4%, right? It is stronger than expected start to this year. And the logic here is that in the world of ultra luxury, scarcity is the ultimate currency. Everybody knows that Ferrari isn't trying to flood the market, right? They're carefully curating who gets a car and when. Even when, even with global macro headwinds, they are still outperforming expectations. It's really a surprise, right? Because their customer base is virtually recession-proof. Alright, let's take a look at the balanced year strategy. One of the most interesting takeaways from the call with CEO Benedetto Vigna was the shift in guidance for the rest of the year. As noted that, here we go, no sign of abnormal order cancellations. As noted in the press release, we can see that here the order book is further extending towards the end of 2027. Wow, over 1 year. With some models fully sold out and orders for others continuing to grow. And Ferrari stressed it has not seen any abnormal level of order cancellations. This is a good sign, right? This is a good signal. And the management noted that profitability will be more evenly balanced between the first half and the second half of 2026. Here, more evenly balanced between half one and half two, largely reflecting adjustments to country and the product mix allocation following development related to Middle East conflict. Well, the Middle East pivot is here because of ongoing conflict in the Middle East. Ferrari is reallocating its product mix to other regions. As we know, there are many tycoon, right? Crude oil tycoon in Middle East. They like luxury car like Ferrari, and the conflict in Middle East more or less has impact on the sales, on the revenue of Ferrari. Alright, so but Ferrari has an excellent marketing strategy. This is a classic old power management move, right? When one door closes, you don't just sit there. You pivot your inventory to where the demand is strongest. This flexibility is why Ferrari's margins remain the envy of the entire automotive world. Wow, so excellent. Well, everybody, especially men, like Ferrari. Not just because it's fancy car, its management is also very excellent, right? Okay, let's take a look at the sold out status. If you want to buy a Ferrari today, I hope you have a lot of patience. Okay, I mean the stock. Maybe we can't afford to the car. We can afford to the stock. But if you want to buy it today, I think you need more patience. Okay, the order book now extends all the way to the end of 2027. What I just said, the order book, right? It's further extending towards the end of 2027. Some models are already completely sold out. Some models are fully sold out. So everyone is waiting for the new model, the Ferrari Loose. Orders haven't even opened yet. They are waiting for the full review late this month, right? Regarding to Ferrari Loose, management confirmed that orders have not yet opened, as the company is waiting for the full vehicle presentation later this month. So my analysis is that, think about the logic. They haven't even shown the car, and the market is already salivating. This waiting list is the strongest economic moat in existence. It guarantees revenues years into the future, regardless of what happens to the S&P 500 tomorrow. Okay, the last one, inflation. Maybe inflation not something for the horse. Well, we can see that here, no material inflation pressures at this stage, right? While every other company is complaining about inflation pressures and the rising costs, Ferrari is surprisingly calm, right? Here we go. Ferrari confirmed it is not seeing any pressure from suppliers, citing its strong relationships with key partners. Oh, come on. Its management confirmed there are no material inflationary pressures at this stage. Why? Because Ferrari has pricing power. If the cost of carbon fiber goes up, they simply adjust the price of maybe $400,000 car, and the customer, who likely owns 5 other Ferraris, doesn't blink. They are not just selling a car, they are selling an asset that often appreciates. Wow. Well, to be frank, I really can't afford Ferrari, but I want this stock, excellent management. Alright, the final word is that the ultimate defensive luxury. Combining the UBS feedback with my own market logic, we can see that UBS give it a buy rating. Here we go, buy rating, and the target in 12 months is over 480. Well, potential gain, right? Potential gain from the current price. And we can take a look at it chart. All right, let's take a look at this chart. Well, we can see that Ferrari has tried to hit the historical high for several times, but it failed, and now it goes downward. Here is look like probably a support level here. It is a head shoulder bullish pattern, right? Head and the shoulder bullish pattern here, and the RSI is close to its oversold zone. So technically, Ferrari has a good profit to loss ratio. Okay, let's come back to the report. Here. Okay, we take a look at the report. The car is really fancy, right? Okay, Ferrari is traded at a premium, and it should be. While the report suggests a balanced year rather than a massive ramp up in H2. The underlying strength of the brand is undeniable. They are managing the Middle East impact with surgical precision and have a revenue pipeline locked in for the next 3 years. Okay, so Ferrari doesn't follow the market. The market follows Ferrari. So if you are looking for a stock that combines engineering excellence with an unbreakable business model, the prancing horse is still the one to beat. Okay, that's all. Please click a like and a subscribe and join our group. Let's discuss about this car, this stock. Alright, see you next time.